from the Land-Grant University in Urbana-Champaign, Illinois. This is the closing market report. It is the 8th day of April 2026. I'm Illinois Extension's Todd Gleason. Coming up, we'll talk about the commodity markets with Greg Johnson from TGM. That's Total Grain Marketing in Champaign, Illinois. Then we'll turn our attention to the war in Iran, its impact on fuel, fertilizer, and how farmers are feeling about the coming growing season. I think you'll be surprised by the sentiment a survey of them gave back to Purdue University. And then we'll turn our attention, as we close out our time together, to the weather forecast, too. We'll do that with Drew Lerner at World Weather Incorporated in Kansas City on this Wednesday edition of the Closing Market Report from Illinois Public Media. It is public radio for the farming world, online on demand at willag.org.
Todd Gleason services are made available to WILL by University of Illinois Extension.
May corn for the day finished at $4.47 1/4, a penny and 3/4 lower. July at $4.58 a bushel, down 2. In December, new crop 2 cents lower at $4.76. May soybeans $11.62, up 3 3/4. July $11.78, 3.5 higher. And November soybeans $11.52, a penny higher for the day. Bean meal up $2.30 at $3.14.10. The bean oil at $67.42, $2.30 lower. Wheat futures soft red down 7 3/4 at $5.80 1/4 in the May. July down 17, $5.91 1/4, and the hard red July at $6.12, 11 cents lower on the afternoon. Live cattle futures up 12.5 cents. Feeders $1.37 1/2 higher, and lean hogs down $2.40. Crude oil $17 lower. Greg Johnson from TGM Total Grain Marketing in Champaign, Illinois, now joins us to take a look at the marketplace. Hi, Greg. Thanks for being with us. Quiet trade after the president, along with the leaders in Iran, have come to a truce of some sort, a ceasefire for a couple of weeks. The biggest trade issues related to that, both, of course, were primarily in the energies, with crude oil down sharply. Wheat also sharply lower as well today. What can you tell me about the marketplace?
Yeah, I think the we have a risk-on day today. With traders getting back into the stock market, into the equities, getting out of the oil position, obviously. The corn and bean markets have not really tracked with the crude oil market the last couple of weeks. It was tracking, there was a correlation there earlier, but the last couple of weeks there hasn't been. So I guess that's the good news, is even with oil down $15 to $20 a barrel today, that really hasn't translated into sharply lower corn and bean prices. Beans are actually a little bit higher, fractionally higher, and corn is just a couple cents lower. So we kind of divorced ourselves from the tie between crude oil prices and corn and bean prices, it seems like, for the time being.
Okay, so what have producers been talking to you about, if they have at all, or maybe they're just in the shed making sure that their machines are ready to go, particularly the planter at this time of year?
Yeah, the corn market has been down 3 weeks in a row. It looks like we're on our way to our 4th week in a row lower. So obviously, with the lower prices, farmers aren't interested in selling at these prices, and I agree with that. The one thing I would say, though, is we probably need to have farmers get offers in when they get busy in the field. They may not be able to pay attention quite as all the time as they have been when they're not in the field. And we're only 25 to 30 cents off of contract highs. And December corn got all the way up to $4.98. I mean, the crop insurance price is $4.62. So we were quite a bit higher than that crop insurance average price. And I know it's early, and if we have weather problems, we could go higher. But if we don't have weather problems, I think the USDA report tomorrow will remind us of that fact, that if we don't have weather problems with the kind of acres that we're talking about and a normal type yield, we're going into the season with a 2.1 billion bushel corn carryout. And we could be somewhere pretty close to 2 billion, unless you tell me we're going to have a drought somewhere this summer. So I think that's a good reminder for farmers to get offers in. $5 is where The market seems to want to run out of steam. So without a drought, we probably won't need to see $5 corn, but we could get back up into the 480s and 490s. So I would encourage producers to take a look at that, see if they can make money at 480, 490, and get some offers at those kind of levels.
Your point is the fundamentals really have not changed, at least not yet, and the trade for the old crop is looking forward to tomorrow's WASDE report. Only, I think, 3 million bushels less than down on the ending stocks for corn. Just down 1 million bushels from 350 to 349 for soybeans. Soybeans, though, have managed to stay higher over the couple last weeks. How do you see that market continuing?
Yeah, same thing there, too. I think the fundamentals might be a little bit better in the short run. In the long run, the extra acres and the big crop out of South America, 180 million metric tons, we'll get a confirmation as to whether that's still in play or not tomorrow. But if that's the case, even a few more million acres, even though it wasn't quite as high of acreage number as what the trade was expecting, if you put a normal yield on that, we're still going to have plenty of beans. We'll get the carry out up into the 400 million bushel range instead of the 300 million bushel range. So again, it's a reminder for producers to get beans sold on rallies. We're about 30 cents off of the contract highs, or not the contract highs, but the highs that we've seen here on this last run up, and well above the crop insurance average price. So those are probably good levels to put orders in without a big announcement from President Trump and President Xi when they meet on May 14th and 15th. That would obviously the demand rally would help us, but without that demand, the RVO thing seems to have played out its course. So we're kind of back to trading a comfortable, I don't want to say a burdensome supply, but a comfortable supply. And so, beans up towards the upper end of that range. If we can get May beans back up to the $12 range, if we can get November beans back up to that $11.80, $11.90 range, those probably wouldn't be bad areas to get some more corn and get more beans sold at this point.
Are we far enough out from the RVO announcement that you've had time to have conversations about what total crush capacity in the United States might be for soybean oil, how that relates to renewable diesel and biomass-based diesel as well, or soy diesel, and how close we are to capacity?
Yeah, we've talked about that, I think, in the past, and we are very close to capacity. So I think for the 26 calendar year, it's going to be hard to increase crush much more than what it is. Now, I think there's a few more plants coming online within the next 6 to 7 months. So maybe next year in 2027, we could see crush expand. But I think crush is kind of near its capacity at this point. So that's why I say we probably shouldn't look for any more bullish news on the RVO side. Now, we could see something on the export side if, President Trump and President Xi work something out. But I guess, everybody's got an opinion on that. I'm not overly optimistic that that's going to happen. So I think the beans have had a nice run up, and I think we've sold off a little bit here recently, but another 20 to 30 cents if we gain that back, all of a sudden we're knocking on recent highs, and that might not be a bad place for producers to get grain sold.
Now, I know the Andersons are still there next to you. They have the fertilizer side. I'm wondering if you have had conversations with them about what fall fertilizer might look like for anhydrous ammonia, particularly the farmdoc team suggesting that their models would predict at this point $860 a ton conservatively, and that could go higher depending on what's happening in the Middle East. But this is prior to the pause, and I would say that they say this will happen regardless, simply because of the damage that has been done to the LNG production facilities that make urea eventually, and other types of nitrogen. So, have you been talking with your fertilizer friends about this, and what are their concerns?
Yeah, you're right. The potential for continued high prices on the input side are very real. I would say though that the farmers at this point aren't willing to lock in those high priced inputs so far advanced in the future with a lot of time to go. Maybe the prices don't come down, but as they usually say when corn prices are low this early in the year, they'll say, "Hey, I can always lock in a loss. Why should lock it in 9 months to a year ahead of time? I'll just wait until we get closer to the time frame when I have to do something, and then I'll capitulate and lock that in if I have to." So I think you're right. I think the prices could stay high, sticky high. But on the producer side, we haven't seen a willingness on the producer side to lock in those prices, even though they may stay where they are or go higher. They're just not willing to lock in those high prices this early in the calendar.
Greg, thank you much. I appreciate it.
Oh, thank you, Todd.
And of course, is Greg Johnson. He is with TGM. That's TotalGrainMarketing.com. The higher price of fuel and fertilizers may persist into the fall. This will cause serious issues for row crop farmers already expecting a fourth year of losses. That prior to the start of the war with Iran. Gary Schnittke from the University of Illinois has been using a model to project future anhydrous ammonia prices for a few years. And today, he says it is providing no relief.
We think this is going to persist into the fall, but we can see particularly the nitrogen sides going up. What's going to be interesting is to see what happens to sulfuric acid. Potash may be a little bit sheltered from these increases. Urea is not. Urea is particularly one which is imported from the Middle East, and that has been our largest increase. And diesel fuel has been going up, which is likely to have some impact, particularly on fall. Biodiesel has been going up. And again, a comparison, all the anhydrous ammonia prices have been going up. And you can see that those increases have been large, diesel and biodiesel as well. We'll talk more and more about this, particularly as we're looking at fall decision making.
Schnittke made his comments during a FarmDoc webinar yesterday. His anhydrous ammonia model is conservatively projecting an $860 per ton price this coming fall. It could be much higher. USDA's Agricultural Market Service showed the price of anhydrous ammonia across the state of Illinois this past week averaged nearly $1,100 a ton. Now, despite all of this deflating news, the March Purdue University CME Group Ag Economy Barometer shows U.S. farmer sentiment improved. This happened in the month of March, even as global uncertainty and financial pressures intensified. Michael Langemeyer in the Purdue AgCast podcast noted that tight margins, rising input costs, and growing financial risk continue to influence farm-level decisions, keeping producers disciplined with capital and cautious about major investments. He did say that all this negativity was offset last month, primarily by just one thing.
Well, certainly the impact of higher energy prices and higher fertilizer prices had a negative impact on sentiment. But there was other factors going on here, and one of them that we didn't talk about in the report that's obviously was going on is the bridge payments were going out. And the bridge payments, if you average those for a corn soybean farm, were about $35 per acre, and so they were rather sizable, and so that probably boosted sentiment. But also, if you look at corn and soybean prices, particularly corn prices were up. If you look at the time we surveyed in March compared to the time we surveyed in February, and one of the interesting things about corn prices is it's not perfectly correlated with energy prices, but it is positively correlated with energy prices. And so because the energy prices went up, corn prices went up a little bit, and I think that offsets some of the negativity regarding the higher energy and fertilizer prices. Another thing I think is important to point out is a lot of producers probably already had purchased their fertilizer, and so this isn't going to be quite as much impact for those people.
The Purdue ag economist did make note that for those farmers who have yet to make 2026 growing season purchases, the impact of the war with Iran will be significant on their profits and or losses. You're listening to the Closing Market Report on this Wednesday afternoon. Our theme music is written, performed, produced, and courtesy of Logan County, Illinois farmer Tim Gleason. Let's turn our attention now to the growing regions across the planet. Drew Lerner is here. He's with World Weather Incorporated in Kansas City. Hi, Drew. I bet you're having a very busy Wednesday.
Yeah, every day is a good day, though, right?
It is.
As long as we get up and we're breathing.
It is. Yeah, that's so true. so very true. I want to start with the snowpack. Probably in Canada. I think there's a big difference between it and that which is in the United States. And then there was a news item that NPR has been reporting throughout the day today related to the potential dryness in the western United States through the summer months and the impact it may have on water supply there. So let's start with Canada. I think the snowpack is pretty heavy there.
Yeah, certainly in the northeast part of the prairies. That would be like northeastern crop areas in Saskatchewan and probably the majority of Manitoba, I suppose. Those areas have quite a bit of snow on the ground, anywhere from 1 to 2 feet, in fact, in several areas. And we just got another 8 inches of snow last night across some of that region. It's coolish, and it doesn't look like we're going to see a tremendous amount of warming. So those areas, they can plant in May. In fact, they often do. So that's really not that big a deal at the moment. But we do want to watch that. And in contrast to that, it's quite dry in the southwestern parts of the Canada prairie, still a multi-year drought prevailing there. And actually, that's part of the whole issue you're asking about in the western United States. Indeed, we've had a crazy warm winter. And the snowpack is minimal. I'm looking at the snow cover chart right now, and the mountains are really thin on the snow. And now this is going to be an issue for water supply in 2027, but probably not so much in 2026. And I say that because the water supply in California, let's say in particular, is really still quite abundant. And it will take most of the year for us to decline that water supply and make an issue out of it. So it would be more of an issue next year, and especially if the winter is not abundantly wet, and so we'll need to watch that. Now, some of the interior mountain areas of the west definitely don't have much snow, and the runoff is going to be pretty pitiful. And some of those rivers and streams are going to run fairly low this year. This raises the potential for fires, of course, over the course of the summer, and having the lack of precipitation in general over the western part of North America certainly raises the potential for a stronger than usual high pressure ridge during the usual summer season. And if that indeed does occur, two things will take place. One, we'll probably have a lot of dryness in the plains to deal with. And number two, the eastern parts of the U.S. and the Midwest in particular would probably have cooler northwesterly flow of air during the summer that would produce some showers and thunderstorms periodically, but not necessarily producing huge volumes of rain. Now, I will say this. I do think that the monsoon will kick in July and August and bring some moisture to the western United States, and some of that moisture feed will come into the Midwest. So I think from an agricultural perspective, we don't want to get too carried away about the dry issue coming up for the western part of the United States. I think most of the agricultural areas will be away from that. The exception will be the Delta and the Southeast, where there will be some ongoing struggles with dryness. We're very, very dry right now in the southeastern portion of the United States. So a lot to look at, a lot to think about. But certainly for right now, the biggest issue agriculturally is really in the western high plains in hard red winter wheat country, where it's still quite dry there, and only a few scattered thunderstorms are expected in the coming week.
It would be Montana, Wyoming. The hard red winter wheat in Kansas, Oklahoma, Texas found some recovery?
Well, that's what I'm saying. I think that the recovery that's going to occur there is going to be partial and temporary. And one of the biggest things that are needed in that particular region is we need a good general soaking and an extended period of cool weather to stimulate new tillers after some damage to the crop over the winter. And I think that this pattern is going to be enough to improve the crop a little bit, but I'm not convinced it's early enough in the season and not convinced that we're going to see the moisture long enough to really stimulate a successful new tillering event and bring those new tillers to a full head and to gain some yield from that. I'm a little bit of a pessimist, so we'll see what happens here. It's hard to kill the wheat crop, and certainly any rain that falls out there is going to be helpful. So we'll wait and see how it goes. But I'm not completely convinced.
I do want to cover South America, but a short word on the primary corn growing regions of the nation, from the western part of the Corn Belt in Nebraska all the way through Ohio.
Yes, for right now, we're looking at quite a bit of rain. And as you know, this is the time of the year a lot of guys need to be in the fields to get those optimum yields. And we're not going to be able to do that very well with the frequency of rain and thunderstorms that are going to take place as we go forward through this next 10 days. There will be a period of better weather at the end of April and early May. Unfortunately, it's going to be fairly chilly during that time period, so drying rates will be slow. And then when we start to heat up, unfortunately, there'll be more rain coming.
And then in South America?
Yeah, Argentina is finally getting a break from too much rain. It's been raining quite a bit here recently. Their sunseed quality has suffered. But most of the corn and soybeans have not been bothered, and certainly the drier weather coming up over the next 10 days will be well-timed and good for the crop. For Brazil, we've seen a fairly active weather pattern here recently, and it looks like the monsoon's going to linger at least another couple of weeks. And if that's the case, this puts the safrinha corn crop in a better position to make it through most of the reproductive season without running too short on moisture, assuming that the monsoon will end later in April. So it's not a bad scenario from a Brazilian farmer perspective, but it's not good news for, of course, our marketplace.
When that second crop corn went in the ground, what was your assessment on the conditions it went in under, and were those good, bad, just okay, normal, and are they improving now?
Yeah, I think for most of the corn crop went in fairly well. Now, there were some pockets of dryness, but there was also some timely rain. The rain amounts were less than usual in quite a few areas, but we didn't go through any prolonged period without any moisture at all. And that was the initial planting environment. And since then, we've had some very good alternating periods of rain and sunshine. The moisture profile is not ideal. We are still lacking moisture down deep in the ground in the southern safrinha corn areas. But those areas can often get rain in April and May from mid-latitude frontal systems coming out of Argentina. So having dryness in the south is not necessarily a terrible omen. If we had dryness in the north, that'd be a different story because we can't get rain up that way once the monsoon ends. Today, the moisture profile in Mato Grosso, Goiás, and northern Mato Grosso do Sul is favorably rated. It's not ideal, but I think if we can extend the monsoon, like I said, into the latter part of April, that buys them some very important time, and they may do fairly well.
Thank you so much for all the updates. We appreciate it.
You bet. Have a great week.
You too. Drew Lerner is with World Weather Incorporated in Kansas City. Joined us on this Wednesday edition of the Closing Market Report, which you can find online at willag.org, willag.org. Just click and play the Closing Market Report from the webpage, or look it up in your favorite podcast applications. I'm Illinois Extension's Todd Gleason.